Hello, hello, hello. Is the sound working now? Is the sound working now? I shall sing a song which will drive everyone crazy until they let me know that the sound is working. So, okay, now it's time to join the dark side and build a PC. No, better audio. All right, sorry about that. It wasn't just audio. I had something blew up. Something blew up. Well, welcome, welcome, welcome. Sorry about the problems before, but we are back in the saddle again. Not to quote Aerosmith or anything. All right, hope everyone can make it back in. Again, I apologize and don't hold it over my head, but please do consider subscribing if you find this information valuable, ringing the bell and hitting the like button. That is out of the way. Hopefully everybody can rejoin us. Have to see what else is not working at the moment, but it looks like at least the stream's going out. So, hope everyone had a good trading day. Hello, Legion Reaver. So, sort of a more quiet day on Columbus Day. We had the Fed speaks today, a little bounce with this afternoon with Brainerd, who was taking his dovish again. Things are going to break. And then the thing is, things could break. We'll have to take that into consideration. And then everybody's screaming, pivot, pivot, pivot. You don't want them to have to pause or do something because things are breaking. Again, if they're cutting, things aren't good. Yes, we know we're going to get a slowdown. Yes, we know we're going to get a recession. It's just how severe it is. But let's still celebrate Ben Bernanke with the prize for economic achievement of pumping stuff into the markets. So maybe I broke the sound from my rant this morning. Maybe that's what did. I broke everything. The equipment still hadn't recovered yet. And look, it messed up the live stream. Gary with the super sticker. I wish the characters could come in. I have to go back and watch the replay to see what the super stickers look like. But I like this. This is like closed captioning. Hippo character falling to the ground in a dramatic way, bursting into tears with the words epic fall in the background. It's almost better than seeing the sticker. I want to see the sticker and have the words because it's like closed captioning for stickers. All right, let's just now get to it. I gave enough time of me rambling on to let people get back in. Again, Fed speak today, just two of them. We got the little bounce off the dovish comments or interpreted dovish comments by Brainerd. Tomorrow, NFIB Business Optimism Index, very, very minor. Redbook, I'm watching this because for contraction, but it's not inflation adjusted. So if there is a contraction, that actually gets interesting. I'm watching for a severe contraction, not just like 10%, like previous was 12.3. IBD, Investors Business Daily, Economic. Optimism 44.7 previous. I do keep an eye on this, especially if it keeps dropping. These are very low readings. So still not a lot of optimism in the Investor Business Daily economic optimism. Consumer inflation expectations. It really doesn't matter because like the consumer is a great gauge for anything. And they put it into an exact percentage. Yes, I'm a consumer and I think the inflation outlook for the next year is 5.3% exactly. No. Stop. All right. Then we got Harker and Mester. Remember though, Wednesday, Thursday, Friday is the time with everything coming out. PPI kicks it off. Fed meeting minutes. So tomorrow, Wednesday's really the day. Are we going to see some possibly choppy price action? Still holding the lows. I know the S&P held the lows. The S&P hit that 87.5. So that's what I'm watching. Mixed market map. Stuff was down pretty big earlier, but Apple bounced back. Microsoft getting hit. Your semis, remember, semis do not try to call a bottom. I tried to also talk about that in the sector overview. It's why these very weak sectors, it's hard to try to fight them. Yes, you might get bounces. Remember, last week you saw some bounces, except for AMD, which got slaughtered. And then look at it today. You're fighting a losing battle with semis. And yes, there was an earthquake in Taiwan, or that hit the area of Taiwan. What else do we have? Oil pullback. Again, we're getting, after the pretty big ramp up, oil was a very minor pullback, but you see some pretty significant profit taking. Again, as I said, trail stops in it. Trail stops, because this is when you see a slight overreaction with a minor pullback, it means stuff's generally overdone, and it depends on your time frame with your trailing stops. We're at 78% earlier today. It was closer to 80. Now at 78% for the 75 basis point. But there's not going to be a pivot, and there's no pivot. There's no pause unless you start seeing this 50 basis point climb. But earlier today, with who is the Fed's now, they're all running together. They are just repeating themselves. And remember, you have a bunch of them. So if one of them comes off a little dovish, you got to convince all the other ones and the Powell that you're going to dramatically shift. I don't think that's happening. Evans, again, unemployment could be to 4.5. We can hit by next spring 4.5% rates. Where are we right now? Right now, we're at 3.25. So there's a lot of hiking room going in when by spring, we pretty much have November, December, February. I don't know if they're putting March in spring. I guess it's in spring. So you got 4 rate hikes going into spring, and we are a long way off still. So we can still see some pretty decent rate hikes. It's still a negative gamma. Remember, we tested that 3,600 today. I started talking over the weekend. 3,620, 3,600, 3,650 are your major areas. There is a lot of gamma play down here. So what really gets interesting, again, we are set up for potential capitulation, but we got to slice through that 3,600. There's going to be some major defense of that 3,600 area. Reiterating that, especially and we're still in extreme fear. All right. Beautiful day for William. Start slowly buying your favorite stocks. Why is that, William? Are we at a bottom? We do have a potential buy signal. Curious to hear your levels on Intel and Apple. Tesla little rally around 2 was an easy ride back to the rotation zone. What's this? It's works 4:51 p.m. Eastern. I don't know what that is. I saw questions from the last live stream that nobody could hear me. There was a question about options. If that could get reposted. I incorporated the tick today with what I've learned, and it made a noticeable difference in the movement of the tickle day in any way. I use 0, 500, 751K as noted areas. And generally, the key areas I notice, they're 4 to 600, so you can use 5, 800, and then between 1K and 1200. Those are yes, bottom in 2 weeks. So William's saying bottom in 2 weeks. When I get a more medium-term signal, we'll go off of that. I'm actually seeing way too many people still. Hey, it's a no-brainer. This is the other thing that has me worried for counter like psychology stuff. I'm seeing way too many people. It's a no-brainer. You buy now in October, it's guaranteed rally through the end of the year. Well, Yeah, that does tend to rally, but when I see repeatedly guaranteed, no brainer, we're just going to buy in October and not worry about it till January, and I'm hearing that repeatedly, that leads me to a little pause moment. I will trade the signals, not just the overall seasonality, because I'm seeing way too much of it's a no-brainer trade, you buy it. Now I think we will get some bounces. My no-brainer would be capitulation. A medium-term capitulation move would get me, then I could be 4 to 8 weeks of more to the bullish. But would that be just guaranteed? No, because if we have weak consumer numbers printing, especially after Thanksgiving in the US, it could get very interesting close to the end of the year. I just don't buy the no-brainer. Tomorrow on the open, not and there's not much. Remember, Pepsi is the first key earnings. Now everything reset. Here we go. So let's just recap. This morning we had a pretty key reversal. And then you remember, after you hit the first level, you raise it. Then you have let me take this one off real quick. The close below 62.5 or to trade below 75. Well, first of all, if it traded below 75, that ended the remaining double. Okay. Oops. Let me there we go. So that's the great way to do it. Oh, I lost some of my lines. The other thing I put on here, I guess when everything shut down because I didn't do it, I put on the harmonics, the reverse harmonics. Once we retested the low area, which gave me 36.05 to 36.02 area. And remember, we were watching for that target to 87.5 because we closed below the 62.5. And we hit it and bounced off of it. So we've fulfilled that rule. Can it still go lower? Yes, but we fulfilled the 87.5% rule. Do we have a potential double down here? No, we don't. No potential double. Now we have a very key line in the sand. What was the low? I think it was 3,600. Yeah, exactly. And then you had the buying spree. Remember, we have all that. The option stuff there. We had the dovish comment or perceived dovish comments by Brainerd. We got the bounce. What do I have? What am I watching for? Above today's high, we could have a percent B buy. So if there's an intraday buy signal tomorrow, or we rally up overnight and then break above today's high, especially a break and a retest, and then are going to close above today's high, that would be a bounce signal into some of the major numbers. And that would only be a bounce signal back to the daily rotation zone, which doesn't give you much room. Remember, a trade trigger, if you don't have proper reward to risk, you either have to really use tight stops to get reward to risk, or you pass the trade. So that's it. Right now, we don't have, this is not a double bottom. The separation is far too wide. What's interesting is if you were looking at this, and it is too wide, but if you were considering that, the peak point is the same as the buy signal I just listed on the daily, and it is back into a clear path, but you have to pay attention to that daily rotation zone. We start breaking back below pretty much about 36.25 overnight. There again, I'd be next to key support isn't back till 3,600. So that's about what I'm watching overnight. If we do rally overnight, again, there's no strong signals, but there's no strong signals. Starting to get above right around 36.40. Then it's 36.50. Above 36.50, we could make that run back to 36.65, that high area. There's just not a lot of great signals right now. So that's about it. I'm sorry. Sometimes there just aren't good signals yet. Keep in mind the 4-hour rotation zone is key resistance, and then it slams into the daily rotation zone. The main thing I'm watching is today's high because it's a potential percent B buy. Daily cycles aren't yet at a bottom. Christo, there was a question. My question, the seller of a put doesn't want the strike price to hit. The buyer of the put paid the seller a premium, so they only think the price could be reached. Well, all right. You're always, as an option buyer, going to pay a premium. Period. Whether it be puts or calls, you're always paying a premium because you're paying for something. That something is the potential right to exercise the option and either go long at the strike price or go short at the strike price in terms of a put. So let's just use this. Let's say I was buying a 3,600 put in the S&P. That would give me, I'd be paying a premium for that right to do it, and I could always exercise that put and essentially take delivery. The S&P isn't a fantastic example for this because it would be cash settled for the SPX options. You also have to take into account the European versus American exercise. American exercise can be exercised at any point. European exercise can only be exercised at expiration. Separate from that, let me just call up a stock. Tesla, 220 puts. Let's say I want to buy a 220 put. I'm paying for that option. I'm paying for that put right. So I'm paying to do that to the put seller. I have, if Tesla is at any point, I can exercise it at any point, but there's no reason I'd exercise it unless it's trading below 220. And generally, there's no reason to do exercise way ahead of time unless you're executing another position. Meaning, let's say I was waiting till the third week in October expiration for the monthlies of Tesla. There'd be no reason as of the 10th I'm going to exercise a put, even a 230 put. Yeah, it's technically $8 in the money. I'm not exercising it right now unless I was going to use that for another reason. Because why? I'd be exercising something way ahead of time. Yes, there are reasons you might want to do it with time value, but that's separate from this conversation. So generally, if I have the 220 put, if it's trading above 220, on expiration, it's going to expire worthless. I lose my premium paid. If it's below 220, I can exercise it. And generally, most firms, if it's in the money, will naturally exercise it. At the money or in the money, they'll naturally exercise it. So if it was on expiration below 220, it would get exercised. I would take delivery of essentially short position in Tesla. If I had the 220 calls and on expiration it was above there, I'd take delivery of a long position in Tesla. Now, the put seller has the other obligation. They have to deliver the stock. So if I am short a put, all right, a 220 put, somebody pays me for that right, so I collect that premium. And then upon expiration, if Tesla's trading below that 220, I have to deliver the stock. If it's one option, I'd have to deliver 100 shares. So when I'm talking now, this will tie into something else. So yes, and there's reasons you want to sell puts. I love doing cash secured puts if I want to take delivery of stuff. Why? Because if I don't take delivery, I can collect a premium. And if I only sell this on stuff I want to take potential delivery of. So again, at key points, you can collect a fair amount of premium, especially if you're putting on those positions into massive sell-offs. Only if I want to take delivery. I don't want to take delivery of Tesla, by the way. I'm just using this as an example. Let me get to a stock that I don't mind taking delivery in at key extremes. Intel. So we get to oversold condition again, like here. Let's say, you're selling into here, you're selling premium, oversold conditions, premium gets pretty pumped. So I can sell in and collect a premium. So even if I get assigned the stock, let's say it was at 20, let's say I sold a 26 put here. So let's just call it at a buck premium. Let's just make it easy. So if I got assigned because it's below 26 on expiration, literally my break even's 25. Why is my break even 25? Because I collected $1 in premium and I'm getting assigned at the 26 put. So I'm buying the stock as long as it's above 25 at a potentially better price. If Tesla bounces and closes above 26, I collect the premium. I'm not advocating doing this. This is advanced strategies that are beyond the scope of just a daily live stream. So yes, if I'm selling a put, I am obligated, if that put is exercised, to deliver the stock at the strike price. There's reasons and times that it is warranted to do for more advanced trading. But you have to if you're selling puts. Now, you can also be selling puts as part of a spread. Like if I put in a put spread, I could be long something. If I'm bearish on something, I could be long the 26 puts, short the 25 puts. Those are going to be potentially offsetting positions. So therefore, yes, even though I'm short one, it's in a spread, the spread positions will offset. Just like if I'm short a call, let me just fill this out. Sorry if everybody knows this. I just want to fill this out for some newer people. If I sell a call, I'm obligated to deliver the stock also to the person who bought the call. So if I sold a 26 call in Intel and Intel's trading above 26 on expiration, I'm required to deliver the stock to the call buyer. Why the call buyer is going to exercise that option, which I collected the money for. The call buyer had to pay for that right. They paid a premium. I collected the premium as a call seller. And now if it's above the strike price, I will deliver the stock. It's also why if there's stock I like to hold, it can be a hedging technique as long as I'm willing to deliver the stock if I get called out to do what's called a covered call. That's where I own the underlying. In this case, it would be Intel. I'm selling options against it. Why? It can be a partial hedge to the downside. Why? If Intel goes down, I'm collecting the premium. Hey, if Intel goes flat and it stays below my strike price, not only do I keep the stock, I collect the premium. If Intel rallies, I have to deliver the stock if it closes above my strike price on expiration. Although, if it does rally, I can always buy back in the call, and then I'd pay the premium, whatever the premium is at that time, to buy back in the call. Same with a put. If I'm short the put and I really don't want to deliver the stock, I can buy in I can buy back the put at whatever the current premium is. Now remember, as a call seller and a put seller, yes, you're collecting the premium and you get what is called theta decay. Theta is the time value of an option. Closer that gets to zero, especially within the last 30 days, it accelerates. So it's why you can capture, it's called capturing theta. So every day that passes as an option seller is beneficial to you from collecting the premium standpoint. There's a lot more to go in besides that, but that's your overview. Nothing is ever 100% in anything ever. There's always a probability of risk. That's right. And nothing I've ever found and nothing will ever be a guarantee in the markets. You're always trading probabilities. Even people say, hey, this put's so far out of money, it's a guarantee win if I sell it. No, not if you have a multi-sigma event. There is no guarantee. Plus, the funny thing is I've seen massive put sellers that are selling massive quantities way out of the money. Yeah, you can get away with it for a very long time. But if we ever have that multi-sigma event, and this is what I have seen take down trading accounts. I've actually seen it from a CBOE standpoint have major damage where people have been banned from trading you're never allowed on the exchange again because of what you blew up. Now, the clearinghouse should have had better risk controls on that. But you know what? There is no guarantee. Even selling way out of the money puts can be a death sentence if you ever get the multi-sigma event. With all the chop, is a double top on the ES still valid on the 1 hour? Which double? This? This is still, yeah. Let's just see. Going into the overnight is not triggered. That is valid, yeah. First and second targets. Primarily, this is, but no, actually, that's a 15-minute. That's way too. I nix this one. You got a triple on the 15. It's turning into a sideways horizontal breakdown. I would nix that one. It's gonna possibly, I'd have to do some more detailed analysis on it, but it's gonna be, if it does fit on a 1 hour, it's gonna be a lower probability. I'd just nix it. It would be a breakdown play pretty much below about 36.23 into a clear path move, and then I'd just use the clear path target. That would be forced. NASDAQ. The overall, oops. Let me just do the overall. This double is still in place with different targets. The conservative targets now are going from the left-hand side. It would need the close above 11,729. A front run pattern would be a close above today's high, and the same thing I talked about would just be a return to the rotation zone, but then potentially that could be rolled into, as long as this double is still valid, a trigger of the double. It is aggressive. The first thing I'd be watching is for a break of the high, and everything I said for the S&P holds. If we roll over, break below, we have the two lows that make up the double bottom, about 10,883. The next key target isn't till 10,734. Dow finally with the 75% came back to a potential double. Above and that would need a close above on a daily basis 30,513, 31,230, 240, 31,607, 31,971. Yes, also on the Dow, front run pattern on a close above today's high. Next key level is still back below 28,870, and then a retest of the lows. And right now, even with the double, unless we start getting a trigger for higher prices, we still do favor a potential return slightly lower. It's where it's in this no man land. Russell finished the double target today and bounced off of it. Closing below 62.5, so this technically favors, again, a retest of the 1664. Aggressive buy above today's high. Any solution to unclog drains? They make products for that, Coco. I just need a signal. And we have potential signals, although they're not for a rally to the end of the year yet. Remember, George, Bob can change his mind too based off. He's like the Fed. On new information, he can change his mind. So Bob is not a signal. Just going to let everybody know, Bob is not a trade signal. Bob can change his mind. If he puts out a call, that is a trade. But Bob, because he thinks it's a rally into year's end, is not, I'm going to buy the Bob signal pattern. That is not a trade signal. Because he did not give an entry, an exit, and a stop. So it's his thoughts that, yes, we could see a rally into year end. He could change his mind in 2 weeks or next week or get other information or get a sell signal long before that. Even my thoughts on the matter aren't a trade. I put out, and I'm not instructing people to trade, but if we have a pattern, I will put out the pattern that could be a trade. All right, but even a pattern that's put out like earlier today, the double on the S&P hit the first, almost the second target, and then reversed. See what else. Bitcoin's gone to sleep in the short term. There's a lot of wash trading going on, John, in Bitcoin, trying to prop it up. I don't think we're going to get the flush move in Bitcoin till we see a flush move in the S&P and NASDAQ. And there's a lot of wash trading going on. Potential inverse head and shoulders on the 1 hour. I hate going this low, especially. No. Nope, this is not an inverse 1 hour potential head and shoulders. This would be way too early. If you're trying to say shoulder, head, we'd need a decent rally and then a pullback and then something else. Funny thing is, your neckline would be somewhere up here, closer to up here, and we already have a potential buy signal somewhere up there from the daily percent B. All right, Legion, thanks for those tick levels. They line up perfectly. Those are the ones I've used for years, and they've worked. They generally haven't changed since I've been following the tick for a very long time. So I wouldn't really mess with them. Late to the party. Love to listen to you too. Well, thank you, Josh. A lot of shorting to only keep us near June lows. CPI won't cause a pivot, but could be good enough to rally on. Again, I'm not going to speculate on that. Either I have a signal or I don't. I have a potential buy signal above today's high in a bunch of the indices, and that's only validated on a closing basis on a daily close. It can get played intraday. That's the only thing. And then the next buy isn't until these doubles kick in. CPI is CPI. What if it comes in hotter than normal? Do we flush? I don't know. I've seen too many people try to predict too much stuff. And yeah, it's sort of a fun game. But that's all it is to me, is a game. At the end of the day, you need a signal, not what you think. Unless you have a long enough track record and you've validated your trades and, hey, what I think is 72% correct, and from a risk reward, yeah, then you can, if you've taken enough trades and can have a track record based off what you think. I'd rather have a track record based off of concrete signals, just because then I don't have to worry about what I think. I played a double top on Tesla 5-minute. Didn't know the exact extension percentages. Closed out 50%. No, I'll show you let me see if I can. This double top, let's see if it was even valid. I don't think that one was. Yeah, it was valid to the first and second. First and second. Here's how it works. It's just a choppy day. First target, here's the exact ones I use. 0.5, 0.75, and 1. Those are the ones that tested out. And why do I use those? Because I was trying to find harmonics that closely line up with stuff. I'm not trying to get, is it 48% or 51%? I'm trying to find the closest thing so I can stick with a series of harmonics that work, and the harmonics test out the best. But those are the three key areas that you could get reversals for. The 50%, and that's an extension. So again, if I'm putting this on, whatever your platform is, you don't have to use TradingView. I'm going to use fib extensions. On this platform, it's extending, picking one of the tops to the base, and then extending from the base. It's not retracing from the base. There's two kinds of extensions, just to clarify stuff for people. There's a retracement extension, and then just an extension. A retracement extension would be, for example, this. Here, down to a low, retracing a move. That would give me a retracement extension. This is just an extension, which is just an extension. So click, click, click. All right. So if you hear me talking about retracement extensions, it's a three series of clicks, and they're 3 different points. A regular extension for me is 2 clicks, and the second click is twice at the same point. And yes, partial profit. Now, let me reiterate one other thing. With this, if you're using here and your third target goes into the wicks, I focus on the first and second targets. If, let's just say it was like this. Hypothetically, let's just say it was like this. With your first or your second and third targets in the wicks, it's not valid. All right? I know this isn't anchored correctly. That's not what I'm trying to show. If this was the pattern, and even if it's like this, if this second target does not cut over into the candle bodies of the move that created the pattern, it is not valid. Take it off. You can still take a potential trade, but your targets are different. Discord, the best $10 ever spent. It's as cheap as lunch is these days, and you get a lot more out of it versus lunch. Thanks. I'm trying to think about how option houses do options going in options expiration. Well, you mean market makers? How they handle that stuff completely differently, because they're always going back to a delta hedge. All right. And it's different the way you're going to hedge off on stocks versus indices versus futures. But option, as you call them, option houses, which I'm assuming you mean market makers, not big firms placing directional bets, because big firms can use options to place directional bets. But if you're making a market, which is a specific designation as a market participant, you are not by the nature of your role, you're hedging, and by the nature of your book, you're hedging. So that's very different. Intel looking so bad. Intel, as I said, why do I like Intel long term? Because we have a great this is a long term building a play, and as I said, this is a stock that selling premium against the key levels. If taking delivery of that, which is in the trading plan, why? Because A, I'm capturing a dividend. B, P to E ratio. Yes, this can still compress. Yes, this can still go lower. But there's some great premium if it's timed. This is not for novice players. And I just listed this out because some people are looking for stuff. And you have to be really careful where you're building a position. But for a long-term potential play. And what do I like with long-term potential plays? A, you can do dividend capture against this. B, you can do premium capture against this. C, if you're willing to hold with dividend capture, you can do covered call strategies against this. So is this something I just want to buy and sit around and say, I guess I'll just buy Intel and hope it goes up one day? No. This would be an actively managed position with a good P to E ratio, a good dividend yield, and Intel is not going away. Now, why is it riskier? As I said, what's our semis? Semis have been in a bear from a sector pattern and from a topping pattern, boy, since the topping pattern back from mid-March. And one other thing I want to point out, I'm sorry if I'm rambling too much today. Remember I talk about these weekly doubles or weekly head and shoulders or weekly doubles just like in crude? We had a weekly head and shoulders pattern in the semis. Triggering, well, technically triggering on March 7th, the week of the 7th. I'm sorry, I said the 14th before or mid-March. It was actually end of February, beginning of March. Look how long. I think it's nearly completed. I didn't look at this going into the close. Look how long it took to complete a weekly pattern that was never invalidated, even with this swing. We're at close to mid-October. Still beginning of March to beginning of October. What's that? How many months? Can somebody do the month count for me so I don't have to do it? Beginning of March to beginning of October. How many months is that? That's how long it took for that weekly pattern to play out. That's where, if you're looking at crude, unless the pattern's invalidated, yes, it hit its first level. This could take 6 months to play out. Keep that in mind. Now, back to semis. Why is this challenging? Can we see more pullback? Well, in semis, we've virtually hit the final target. And what's there to 62.5? We're back. Well, I'm going to keep a close eye on this with the weekly 200. We've essentially completed the head and shoulders pattern. 62.5 is a key area. We start getting a close with semis below here. Think about that. That's why I put together all this analysis. What's amazing to me is so many fewer people watch the stock sector overview, which even from a learning perspective, you're missing fantastic information. Let's say we get a weekly close below the 62.5. Do you think that would come into play with the way Intel building position is managed? Yes. Why? Because we could see substantially more pullback. Now, Intel, look at this, and it's not, you're going to still get earnings compression and tough times. I'm not just saying that's why it's not a blind buy, but it's a P to E ratio of 5.52. AMD, 24.57. NVIDIA, 39.6. NVIDIA, dividend yield, 0.13%. AMD, dividend yield, zip. So if I was trying to do something in it, because semiconductors aren't going away, Intel's still expanding in the USA, building new plants. Can it get earnings compression? Yes. Which do you think can get more earnings compression, AMD, NVIDIA, or Intel? Which pays a dividend to offset any declines? Going into some more advanced stuff here. Not advocating that the average person should buy Intel right now. If you're wondering the only things that interest me from a longer term position building, that is why. Sorry, I'm going off into... So NAS industry, that's why. You have to take it within context. Do I have any red flags when I look for an option Greeks? Do I have any red flags? I don't look for red flags in the Greeks. Red flags, I look for red flags in implied volatility, either due to massive complacency and implied volatility being way too low versus historical norms, or implied volatility being off the charts, multi-sigma, way too high, especially after a key event where volatility could be mispriced. Why would VIX longs hold on to the VIX is getting to a point where there's lots of reasons you'd hold on to a... Remember, there's lots of reasons you're also can trade volatility from a VIX standpoint. A, it can be used as a hedge. B, it can be used as catastrophic insurance, expecting higher VIX. There's lots of... Again, when you start getting into things, options, and options against an underlying, there could be multiple reasons you'd want to hold a position that doesn't make sense from hedging perspectives or for insurance aspect. There's lots of different nuances depending on the way, what kind of player you are in the market. Buddy of mine is down $1 million. Well, what you got to put that in context, Gary. Let's say his 401k is 20 million. $1 million would only be what? 5%? Let's say it was 10 million. $1 million would be 10%. Is it 10%? Yeah, it's uncomfortable in this market, but it's not catastrophic. Now, if your 401k was 1.5 million and you're down $1 million, that's pretty bad, and that's catastrophic. So that's why I would rather have people quote percentages versus absolutes. Like somebody down $500, if their trading account was only $1,000, $500 is catastrophic. If your trading account's $1 million, $500 is nothing. So the percentages are very different. I gotta get... Let's check Apple. If I missed your stock, put it back in. No, there's no... Wait. Any double bottom setup on Apple? Well, if you're looking at the day, a weekly, no. Because it's not reversing a move, those two bottoms. If you're looking at the daily, yes. If you're looking at the daily, there is a potential double bottom. It's retraced enough. It's still within the range. So yes, I'd use the conservative targets because against the trend, it's reversing. Technically, it's reversing this whole move. But the most recent move, This hiccup doesn't matter. So it's this move. So all your targets fall within this move. It's technically even this move, and that which would be technically this move. So you're fine from the reversal standpoint. Would need a daily close above 147.54. Yes. And as people always want to know, is how could I get in beforehand? Well, an aggressive buy is above today's high, and the target's the rotation zone. There's also, if you start getting above, you could do the gap harmonics, but I'm just going to simplify it. If you start getting above Friday's high, there's a gap fill potential. So there's a couple earlier potential entries that then could be rolled into a potential double. What personally I like to do is take partial profits on things if there's enough upside momentum to warrant holding into the potential double. And therefore, then if the double triggers, I've already banked some profit, I can always re-add to the position. So, yes. Does this, because there's a potential, I have to put this off because new people keep joining all the time. Does that mean that this has to unfold? No. A potential trade setup can be invalidated by further price action before it ever triggers. It's just like potential energy. There's potential there. It doesn't ever have to change into kinetic energy, by meaning the ball could remain at the top of the hill and not roll down it. So therefore, it has a lot of potential energy, but as long as it remains at the top of the hill, it has zero kinetic energy. This is a potential double bottom. It has not triggered yet. It has zero kinetic energy. You don't have to be smart to get money, but you have to be smart to keep it. Okay. I know a lot of dumb people who've kept a lot of money. They've just avoided doing dumb things with it. I don't know if that's necessarily smart. They've avoided being dumb. Don't necessarily disagree, Rich. I've seen we could come in slightly hotter, and it could already be discounted in this environment. If it's a big miss to the upside, yeah, I would see us taking out the lows. I've learned. I've been doing this since '92. Actually, and before that, I was studying the market while I was still in college. Uh, if I had money for every time I thought what the market would do versus what it actually did, I'd even have a lot more money now. Why? Because what I think, that's why I'm such a stickler on trading patterns, because what you think is going to happen and many times what transpires aren't necessarily the same thing. And that's true for most people. CF stock. CF still, nothing's changed since we looked at this last. Besides, you do have a potential double top. So now, if you're trying to trail along, from doing this, we have the key harmonic level that's not been able to close above yet. 108.59, 108.60, 108.59 is the exact harmonic. No close above that yet. You have a potential double. So from a trailing standpoint, that's an easy one. You get a close below that low, 103.25. It then favors the pullback. So depending on your time frame, and this is another teaching lesson. Let's just say magically long from down here. Magically long. Depending on your time frame, this might not be a pullback stop out for you. For other people that are more aggressive, this could be a pullback stop out. Depending on your overall analysis, what your long-term viewpoints are, what triggered the trade. From my standpoint, since it's not above the 62.5, we trigger this. We can easily pull back here. Then we have a gap fill, and the gap fill isn't to the open here. It's to this key close, which is right at the 200. I don't want to potentially ride it back down to the 200. So that's the stop point. The other question people ask, well, why don't you just get out of it now? Because this could never trigger. And it could march up, close above the 62.5. And then what do I target? 115.93 and trail a stop continuing. But for somebody else, if they're like, yeah, I'm in this for years, I'm building a core position, you know what? My stop's down here, or my stop's even lower. Fine, that's just something you notice. Fine, whatever. If it triggers that, whatever. Nowhere near my stop. Somebody else might say, hey, I don't want it. I don't want it anymore. I'm just in it for a swing. And because you have a potential trade does not just mean you magically exit. Now, somebody who's trying to day trade this or played a little reversal back into the rotation zone, and let's say they're long from 104.75. You know, I'm not taking a huge risk on that. My stop might already be, if I was in that position, hey, we've retested this high area, took some off, worst case, stop at break even or better. So if we start trading down, before we even trigger this double top, I'm out. This is why your time frame and everything else matters. I just showed 3 different scenarios, which, you know, for the very short term, my stop's way above this double even triggering, so this double doesn't matter. The only reason I watch this double, hey, maybe we come back down here with the gap fill and then there's maybe another long trade. Or I'm looking to trade this short from a very short-term time perspective. From a long-term accumulation, this pattern doesn't matter. Why? Because my stop's based off the long term. From a swing trade, yeah, this stop matters because I don't want to ride it all the way potentially back down to the 200. And sometimes you'll get that. And one could be right, one could be wrong. They could both be right on different time frames. Sterling? No, I'm broadcasting it to the Pure Exposure Media Group. That's another one of Bob's companies. I run multiple streams, just like it also goes to Facebook. It also goes to, I don't remember everywhere it goes. They're not cloning it. That's a valid channel. And if you haven't already subscribed to it, you probably should. I'm not going to get into trend right now. I've already done. The one is the pivot point for the trend. You're going to want to watch the strength of the move. It moves inverse to the markets. We like my rambling. That's why we keep coming back. If you kept saying stocks only go up, we wouldn't be here. So you'll disappear if I say stocks only go up. You know me, we analyze both sides of the market. Even in bullish or bearish mode, you still got to analyze both sides. Otherwise, how can you come up with stops and targets? Christoph, hi, coming in late. Sector overview is in gold. I try to put additional valuable information in there at times. Trading is not an easy game. It's easy in a rip your face off bull market with pumped up liquidity, which a lot of people That's all they've been exposed to recently. Well, not in the last few months, but before this. So they thought trading was easy. And they thought you didn't have to analyze anything or do anything. 2.3 million. All right, so he's down a million. So it's got 1.3 left. That's a pretty substantial drawdown. Why don't I want a 50% drawdown? Do people know why you want to limit your losses? Because it's so hard to recover, especially once you get to the bigger drawdowns. Remember, you take a 50% drawdown in your account, whether it's a 401k or anything else. What do you have to make off your remaining money? You have to make 100%. Like if I started with 10 bucks and lost $5, so I have $5 left. I need a 100% return on that $5, which is $5. 100% of $5 is $5. And that only gets me back to my starting point where I was at before. You start getting drawdowns above 50%, it gets really hard. And you know what? That's why you start keeping your losses small, because losses and gains tend to reward each other. It means losses snowball onto losses when you're in market conditions that warrant it, and gains tend to snowball. But you want to, when losses start piling up, you want to limit them. It's also why I said, even in this environment, unless we get a major long-term signal, even longs are at reduced percentages, portfolio percentages. Oh, but people say, but you're going to make less. Yes, but the market, I'm also going to lose less. When the market's conducive to, hey, we got longer term signals triggering, blah, 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 blah. Fine. That's when it's easy to ramp up risk. This is what people don't get. This is why so many people in challenging markets go broke, especially leverage people. I mean, what do we have? ARK today? Well, Kathy wrote another letter to the Federal Reserve, like, save my friggin' portfolio because I'm a moron and chasing growth stocks into a tightening environment where the only reason a lot of my stocks went up was because money was cheap. And you're making it really hard by increasing the cost of money? So my stocks are suffering. Can you save me from my stupid strategy? Well, that's my interpretation of her letter, which is what a lot of people still think. It's why, you know what? I've talked to a lot of people. You know why they want Fed rate cuts? Not because they give a crap about the economy, because most of them are like, fine, I'll be fine. Even in a severe recession, I'll be fine. I'm not going anywhere. My portfolio long term, it might take a little bigger hit than I want, but I'll be fine. You know why they want rate cuts? Because they want the juice for their stocks. Oh, it's easy. Cheap money environment makes my portfolio go way up. I just want it to be easy. Forget that it creates instability and unintended consequences like widening the wealth gap and everything. I just want, you know what, they don't give it, and it actually, I'm like, do you care what happens? Nah, I'll be fine. Economy, we'll go into recession. We're already going into recession. I'll be fine. But why do you want rate cuts then? Don't you want to get rid of inflation? I just want the cheap money so the portfolio goes up again. I was making 40% last year. You don't care about the economy if they... No, I want my portfolio. Ugh. I'm new to the stock market. You buy a deal of one day? Well, then you're at the wrong channel, because if you're new to the stock market, shouldn't be here. How old am I? I was born in 1970. I'm just catching ahead. We'll have to go through that later. I've run long in the tooth. The fundamental side, if I was talking on VC, I would be selling the idea to people to buy bank stock because of higher interest favor people buying CDs, also credit card companies. Yeah, but a tightening environment makes it more challenging because of. I don't want to get into that right now. You don't have to be smart. You just don't have to be. See, it's a lot easier from my perspective than from being smart. Just don't be stupid. Uh, I'm way behind. Yeah, thanks for doing them. A 43% drawdown. That's somebody did the math. I don't want to. I'll have to do a video at some point on drawdowns versus the amount you need to make to recover from them, which is really eye opening. It's non-linear. Yeah, 50% means he has to make 100% to get back to where he was. Limit your losses. Well, you're going to lose money, period. If you're investing or trading, you're going to lose money. There's going to be times something happens, you're wrong, especially trading. It's part of trading. Even investing, hey, you can invest in the wrong company. Something can go, a company can make bad decisions. It's why you want to know where your losses are and limit your losses. You're going to lose money. It's just managing the losses appropriately. There's no way if you're investing or trading to avoid losses unless you're one of the idiots who says, it's only a loss once you close the position. Well, you also have the time value of money, as I've talked about with this idiot still holding Cisco from back at the .com because their average position price is higher. I'm not holding a position for 22 years because, no, I haven't taken a loss in that position, but I've taken a loss on time value of money. Well, there we go. For when I get close to Halloween, get some funny fake teeth and goofy glasses. Is that a suggestion for me that I should wear, or should I put on a wig? That's why memes are so valuable. I could just paste the numbers in a picture percent loss required to recoup. Picture is worth 1,000 words. I guess that's why memes are so popular. All right, we had notes. By the way, notes saying I was watching between 111 and 110. We hit this. This was a pretty blistering. So now, yes, the double's still in play. But we finally completed after the close below the 62.5. We completed the return to the 111s and beyond there. The yield curve, I'm not just looking at this. This was a pretty substantial move up. Yeah, the Treasury market closed early, but this was a pretty substantial move. Also, the gilts again started moving in London. Keep an eye on that with the gilts. By the way, once this starts accelerating upwards again, going to get very interesting. What else do we have? Dollar index closing above the 62.5, as Sterling said. That favors a return to the 87.5. Also, to touch on your question, with the dollar can keep going and the VIX can keep going, they can actually trade in the same direction. Or they could have nuances with the amount of volatility and time frame. What else? Let me just get through a couple more things. This is what I was talking about. You had a pullback of 1.6% in crude after this run up. That's just minor. And you had things like Exxon pull over 2% back. There's a lot of profit taking. By the way, the aggressive stop, which I said was below Friday's low at this point, would be below today's low on a closing basis for the aggressive stop for longs from crude. Keep an eye with Japan reopening really close to this 146 level where intervention was before. So I will be on the lookout for potential yen intervention. Oh boy, it's time to end the thing. We got the chat bots showing up. Mike, what should I look into regarding market profiles? You mentioned something about this morning. I think market profile is the way to analyze volume areas and buying and selling pressure. There's something called market profile. I think, do I have it up here? No. You can, if you're using TradingView, you can look up some. There's the real good sources are on Bloomberg Terminal. There's some stuff on here. I think I have. Do I have one on here? I used to. There are things to do with market profile. I don't know what this one, if this one's any good or not. It gives you distributions like this, where it does volume, price, time. There's a whole thing you can look up. Well, who did it? Stoudemire. Forget the person's name. Way back when. Why I talk about stuff is because you can line up key things. If you learn clear path, first of all, you learn the basics of it. All right. But there's a whole science to it. There's a whole way it's distribution. It's a double hump. It's a single hump. You can go down into weeds with it. What I like doing is fine-tuning key levels on shorter time frames to fine-tune clear path moves. Because you're going to see the area of voids. I'll see if I can put up some stuff again on here. Other than that, this fall reminds me of 1998. Wow, we're going back to where we had the demise of long-term capital management, Asian currency crisis, 2 years before the next presidential elections, and the world's spinning out of control. And we got an election coming up in this country in November for the midterms, so we shall see. Yes, that's where you could use the point of control. I'm going to tell you something. You don't, unless you want to become a market profile junkie, you don't need to do that much. I use it to fine tune stuff, but I can get 80% of the way there using stuff from ClearPath. It's literally fine tuning, and I only use it in stuff that's active, like that I'm actively trading. Otherwise, I don't bother. And it's based, the traditional one is based off of 30-minute segments. But now you can roughly apply the same thing to any time frame using current analysis. So yeah, thank you. That's the name. Raj loves it. And again, you don't need to go into the weeds with it unless you really want to. And why I don't cover it on here, because we'd literally be, I turned doing the S&P analysis in the pre-market into like 30 minutes just in the S&P itself. And it wouldn't be helpful to most people. TradingView has a drawing tool called Fixed Range Volume Profile. Is that I used to have one on here. I just don't follow it on here. Fixed range There it is. That's click to. Oh, there's another one I had. What was the other? I'll have to. Is this the one I used to use? Yeah, session volume profile. I think this is the one I used to use on this platform. Yeah, let me take off this other one. There we go. There we go. So this can be utilized. This was the one I used to utilize. So I'll give you an example. You see how you got a clear path move. It dwindles down to a base. You got the, even here, look, I have just, and this was not using this. This was using clear path moves. We got the breakdown area. We got the prior end of the clear path resistance area. You see all this? This is all the volume that went off in this area, with the peak being in the middle. And then you have a lull. This is the clear path move. And then as a breakout area, okay, and then it dwindles down. You can get a lot of this stuff just from here. You see how it's built up right around here? Well, what's this? This is major back and forth consolidation. So you can start doing your analysis utilizing stuff just from clear paths. And fine-tune stuff like you see in here, single candle clear path. But all right, here's the area. Remember, I've marked off with support resistance. And look, even on the 4 hour, you see all this volume at there. Why? Because if I dive down from the 4 hour to 1 hour and 15 minute, I'm going to see all the pausing areas there. What happens here? You see, goes way down. What starts kicking in up here? Well, we got consult. This is the bottom of the clear path to prior breakout zone. You start getting the volume rising up into there. This is the one I used to use. Have a great night, Paul. So that's, if you want to investigate there and there, you can go down the rabbit hole with this. Again, I'm going to have to wrap this up. I've gone on an hour and a half. Sorry if I bored anybody. But that's how you can really start getting down if you're really trying to fine-tune stuff. All right, see this little clear path segment in here? Look, boom. So you get above this point, your breakdown point is here where it climbs again. You got the consolidation area. Right there is your volume profile. Then you get up here, you have the larger term clear path. This area, it dwindles. You fine tune it with the 15 minute. Look where this peaks. And then you can put on all your other points. I find it easier. I can just look for again, 80 to 90% of it, just look at clear path moves. You're welcome, Legion Reaver. I shall talk to everyone later. Let me just leave it at that tonight. Hope everyone has a fantastic evening and you've learned something. If you have, please come back, leave some comments. If you are new here, please do consider subscribing to the channel. With that, I shall talk to everyone later. Bye for now.